The February changes to bounce back loans. In this video, I'm going to look at the most recent, the February 2021 changes to bounce back loans. But then I'm going to also look at the CBILS loans briefly, and I'm going to look at the tax implications as well. This is part of a series of videos about tax and accounting issues, so if you want to be kept up to date, then please subscribe to the channel. You'll be very welcome. And if you press the like button, it just helps me get the message across, because I think these are important messages. So the bounce back loans, there's 1.4 million bounce back loans have gone through the system. I didn't know there were 1.4 million businesses, let alone 1.4 million that needed bounce back loans, and the total value of the bounce back loans is £45 billion. That's a little less than half the education budget, so the huge amounts of money have been borrowed under these loans. And the loans that were taken out from April, May, and then right the way through till now, last year, so April, May last year, so the repayments, the first year you don't make any repayments, so the repayments are going to start in the spring, early summer for most businesses, because I think actually most of the loans were taken out in those early days. That said, you have until March, the end of March 2021, to take out a loan or to top up a loan if you need more finance and you haven't already taken advantage of the full amount. The maximum amount that you can borrow on a bounce back loan is a quarter of your historic turnover, or up to a limit of £50,000, and it turns out the average that people are taking out is somewhere around £32,000, and I think that's skewed towards the top end, because I think an awful lot of businesses have taken out the full £50,000. So what are the changes? So the changes make the loans better than ever. So the first thing is that you'll be able to extend the loan from, at the moment it's a 6-year loan, but we sort of think of it as a 5-year loan, because the first year you don't make any payments of anything, there's no interest, and then from year 1 to 6 you make the repayments, so it's like a 5-year loan with a 1-year delay, but that is counted as a 6-year loan. So that's 6 years. You're now going to be able to apply to extend that 6 years to 10 years. So that'll be a 1-year repayment holiday followed by 9 years of repaying the loan. But it's even easier than that, because they've said that you can have, within that 9 years, you can have 3 periods where you just pay the interest. So effectively you'll be paying the interest for up to 1.5 years. You'll be able to have interest only periods, 3 6-month periods, and then which means that you'll pay the capital back over 7.5 years. They're also saying that you can have a complete repayment holiday of 6 months, but you do have to have made 6 months of payments before you have the repayment holiday. So if you took out your loan in May 2021, you can't go straight into a complete holiday on payments, on repayments. So what does that mean in practical terms, in numbers? So if let's just talk about a £50,000 loan. Obviously if you've got a smaller loan, then the numbers are smaller. So on a £50,000 loan under the old scheme, you're going to be repaying £10,000 back, £10,000 back per year, which is just over £800 a month. That reduces to £463 per month if you're taking it over 9 months. That's the capital part. There is also the interest. The interest is at 2.5%. The interest on £50,000 is £1,250 a year, £1,250 a year, or just over £100 a month. So if you're going to go for the interest only option on a £50,000 loan for the first 6 months of the repayments, you'll be paying, I think, £104, just check. Yes, £104 per month in repayments, which is really not very much on a £50,000 loan. So those are the changes. So those are the changes. So what are the mechanics? How does this work? Well, of course, it's not the government. The government's setting the rules, but the government isn't making the loans. It's your bank that's made the loan. So your bank, and each bank will be different. I think it's about 100 banks that are involved, but obviously the main 5 banks, but an awful lot of banks involved. They will be writing to you and giving you options. And my understanding is that the extension of the loan from 6 years to 10 years, you'll just be able to apply for that and it'll sort of automatically be given. I understand, I would imagine that in order to get a repayment holiday and to get a complete holiday on all payments, then you will need to fill in a form that says, you know, you have my turnover has really been very badly affected, because that won't be, I'd imagine, for a normal business that's just had a bit of a break in its income. So there will be a simple process that that your bank will take you through. So those are the bounce back loans. What about the C-bills loans? Well, the C-bills loans are larger loans. Those are from over £50,000. Now, though the terms of those has not been changed. So often the C-bills and the bounce back loans are taken together because the dates, they both end at the end of, the applications end at the end of March 2021. The terms are very similar, but the C-bills loans are different in reality, because with a C-bills loan the bank is taking risk on the loan, whereas with a bounce back loan they're not taking risk. So I think that the government will find it more difficult to change the rules on the C-bills loans. That doesn't mean that they won't, but they haven't done as of the beginning of February 2021. Maybe they will very, very soon, but I know that it would be more difficult for them to do it because, as I say, the banks are taking risk, and the banks might not want to see that risk extended from 6 to 10 years, and I think they'll probably bargain with the government if that's what the government wants. So I always like to think in terms of bounce back loans and C-bills loans. Are they taxable? Well, the rule is that the grants that have been received by businesses, those are taxable, whereas the loans are not taxable. So they're not inherently taxable when the money comes in. But there is a tax trap that we always have to be careful of, in that if the business gets the money, that's not a tax event. But taking money out of your business to you know, just for your normal living expenses. So if you pay yourself in dividends, and you take that money out to replenish your dividends or replace your dividends, then that is always a tax event. And if you don't have enough reserves in the company to pay out the dividend, that can have complications in the way that your tax is calculated. Now, I really do suggest that if you are using the bounce back or C-bills loans to pay yourself your normal salary as dividends or dividend replacement, then you do need to speak to your accountant, because there is a tax consequence of that. So there we are, bounce back loans. Who would have thought it? The loan that takes 10 minutes to apply for, you can repay over 10 years. Incredible, and just at 2.5% interest with no upfront costs. It's not surprising that 1.4 million businesses have taken out those loans. And so changes to the terms, makes change to so many businesses. And making them softer will make it easier for businesses as the furlough ends and we hopefully get into more normal times. Thank you for watching this update. Please subscribe to the channel if you want future updates. You'll be very welcome. And press the like button. It really helps me. And if you have any comments, I'll be interested to see them. Thank you.